Today I want to go over 3 stocks that I am buying myself, and I say with all of my income. What I mean by that, all the cash income that I get and all the YouTube income and all these other income sources will be going into stocks because I feel like it's such a good time. What I do not mean I am doing is my personal training income and my clientele and that business. I'm not putting every cent in from there because bills need to be paid, mortgages need to be paid. I have an E92 BMW that likes to break down on me and it needs to be fixed. So with that out of the way, I hope you get some more confidence in this video, because a lot of these YouTubers that make videos about stocks will say these are the top 10 to buy these ones for growth, do this, do that, but they're not actually doing that themselves. For a couple of reasons. One, you can't make all these videos of all the different stocks and, you know, invest in so many things because you're going to run out of funds. But also, they just like to make videos with some information, put it out and get views. So this is what I'm actually doing. Hopefully it gives you some confidence. Let's jump into the first one. And there's actually one that I bought 2 weeks ago that was a beautiful move. Apple. I bought a price of $278, and if we look at the price right now, we'll see that the price is $307. Okay, not even focusing. So it was a smart little buy. Now, it did have a bit of a dip last night. Now, Apple is a really strong one because they package things well. So once people are into their ecosystem, they tend to stay in it. Now, smartwatch technology and things like that has come. There's nothing really right now brand new, but I think when everyone gets back to work and everyone's using all this technology, they're making sales here and there. And it's just a big company. I don't particularly like how they handle their consumers, how they kind of force you to do these things and you have to use Apple products, but it does make for good business. People buy into it and they'll tell everyone that iPhone is better than Samsung. I do think it's a lovely company, so I bought into it, and I will continue to hold that until I feel that they're at a nice point where they're probably overextended a little bit much. And keep in mind that Warren Buffett, the largest part of his portfolio, the man that's gained $70 to $80 billion in pure investing and the intelligence behind it, the largest section of his portfolio, if I'm not still mistaken, is still Apple. I think it's clearly the biggest, unless anything major's happened since his big conference he had last week. So there's Apple out the way. Feel free to, I'll link it below. You can read into more information. The price to earnings ratio is trading at 24, which is a pretty healthy number. Generally, the higher it is what people expect it to grow to if it's trading really, really high. Okay, so that leads us into the next one. And one that is trading very high is Disney. Now, I will be buying this today, actually, because like I said, the cash work that I do, I'm going to go and deposit to the bank, bang, buy the stocks straight away. So Disney's caught my attention really since last week and this week for a few reasons. So obviously the COVID virus locked down all of their Disney worlds and everything, heavily impacted the decline of their stock price. If we do have a look at what it was at in the last 12 months, we can see that we were about $150, just a couple over. It crashed to a point of 92, no, lower. Did it break 90? Into the 80s. I can't get it to tick on there, it would be better on computer. And now it is trading just around the $100 mark. So, I feel like there's huge potential for gain here. Quite confident in it. It's one of my most favorite of these 3 stock picks right here. I mean, I'm already in Apple, definitely will get into Disney. And keep in mind that in their news stories, in July, they'll be reopening their resort stays. Maybe not in all, I have to dive deeper into exactly what that business move will be, but that's always good news. They're hovering, they're sitting there, so they, unless something goes terribly wrong, I don't think they're going to decline much further than they are already, but they always can, depending on how the market moves. Maybe a second outbreak, times get extended, but I think in the long term, I am quite confident for my own self that that will grow from here on upwards back to probably where about they were, but who knows exactly. Have their Disney Cruise Lines, I believe, they'll be back in action. All their theme parks will open. People love their theme parks. They'll be a bit wary as soon as the COVID virus is open and people are allowed back in. I think there'll still be a bit of a waiting period before it grows back up. So probably, on the long-term investment side here, probably a couple months at least before you see any really good gains back. But the other big point is that I believe they are on track, if not already hit 20 million Disney Plus consumers on their streaming TV service. We've seen Netflix had a huge gain in this as well, but because Disney's such a collective company, influenced so heavily by their Disney worlds and their parks and everything, that I think the fruits of this growth are yet to really shine. Okay, so a couple of things. Their parks will reopen. We've got good streaming services. I'm actually tempted to get it because it really does look like a good series, and I have not yet seen The Mandalorian, so I was always planning to kind of just get it for the free week, watch Mandalorian. That's good enough. Netflix is fine, or whatever, movies and stuff. But no, Disney Plus adding in some really cool stuff. I think they're going to really give Netflix a run for their money here, and really, really healthy pick, I believe. But this is just my own thinking. Remember, any decision that you make, take it with a grain of salt from whatever person you get the information from, all right? Ultimately, it's up to you and what company you believe in. Finally, we have Pepsi. Now, I have heard a lot about Coca-Cola. Coca-Cola, Warren Buffett says, has not hit its peak or prime yet. It will continue to grow because of third world countries have not yet started consuming it at high rates yet, if at all. So when it finally does reach there, more production, way more people, it'll start to go up once they get access to it at a high volume, and it'll be good for its long-term growth. Along with Coke and Pepsi, they've both had very, very successful long-term growth of their dividends, making it a very, very good investment. Warren Buffett's held Coca-Cola for many, many years, I believe. Now, Pepsi sticks out a little bit more to me because of their aggressive business decisions. They've just acquired Rockstar Energy recently, maybe a month ago now. Now, Rockstar is no little contender in the energy drink game. So if we work our way up, we've probably got V Energy. It's an Australian company. I'm not sure if it's over in the overseas too much, but you don't see it around too much. Their marketing and branding isn't as strong as, say, Monster Energy, which has really taken the market, and Red Bull, which is one of the first on the scene, and just one of them big businesses, empires that I don't think will ever be knocked over. So with those two, we then have things like Mother in there by Coca-Cola. They even have their Coke Energy now. I don't know how that's going to go for their competition, but decent product. And Rockstar slots in there. So Rockstar's always been around. They've kind of tried to follow the trail of Red Bull and Monster, and had some good growth there with the motorsports and things like that. But they've been acquired by Pepsi, and Pepsi owns many different companies now. I'll display a picture, if I remember, of what is actually under their umbrella company or that they all own. But really strong dividend growth. I think it's been better than Coca-Cola, and I'll put them up by their side. And when I find it here, you see here they're trading at $133, which they've already bounced back a little bit from this decline. So they were, before COVID, trading at 146, dipped all the way down to near $104 before they bounced back to 135 and are hovering now at about 133 US dollars there. So, did you miss the ultimate dip? You did, but it doesn't make this a bad choice. I'm still going to invest money into it because over their 3-year period there's been continuous strong growth, and their price to earnings ratio is hovering at 25 to 26, nice and strong, as well as their aggressive business moves to acquire more things. And it's a little bit more outside of the box, okay? I think Coca-Cola, a lot of people will direct their attention more to that. With Pepsi being this a little bit more of an underdog, but I've noticed of their business moves and their growth and their partnerships with different businesses like KFC. You always see them. You always see them at Domino's. They have all these great partnerships. I just feel Pepsi a little bit stronger than Coca-Cola. And that will round up my top 3 trades there that I'll be doing myself. And because of that, I like to put that information out there, and maybe you can take some from that and implement it into your own mentality and moves that you will make. If you found this video helpful at all, then please do hit the thumbs up button. It just shows YouTube that, you know, this video is somewhat good and it will kind of rank it a little bit better. And I've noticed with my analytics lately that 99% of anyone that's ever watched my videos isn't subscribed to any of my YouTube channels. So if you do happen to think that maybe down the road you'll like some video I bring out you may find interest in, or a little bit more valuable information, then please do consider pressing that subscribe button. And with that said, thanks for watching, guys. I will see you next time.